Hello, good morning to all and happy Friday. Welcome to today's Daily Dose of Market Insights by OANDA. I'm Kelvin Wong here, the Senior Market Analyst of OANDA Asia Pacific. Happy Friday, and today will be the 26th of January 2024. So before we start our Daily Dose of Market Insights, let's take a look at the disclaimer slides first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice for any investment product. As well as this presentation, any forecast, prediction or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so right now, before we jump straight into the short-term technical outlook on the various cross assets, let's have a recap first of what has taken shape yesterday from the start of the US session till early today Asia session. All right, so during the European session, one of the key events to take shape was ECB. So what you could see over here is that let me share you my screen so that you could see. So over here, ECB actually came in as expected. That means they do not cut rates yesterday, still maintain it at that a benchmark rate at around that 4%. So, but however, based on the guidance given by ECB President Lagarde during the press conference, she did mention that over here is that the summer months, there's a high chance that this coming summer months will be the start of a first interest rate cut in Eurozone. So now market actually starts to already price in more than 50 basis point of easing by June. Okay, so the key thing over here is that and also traders in the money markets in Eurozone actually expect more deeper and quicker cuts from ECB. So that actually causes the euro dollar to actually tumble yesterday during the European session. But what's interesting over here, it managed to hold above that key pivotal support that we've been highlighting since the start of this week, which is that 1.0850, 1.0820 level. So all in all, right, given that this a very significant short-term support on the euro dollar didn't break on the downside, that means i.e. it didn't break below 1.0820. That means i.e. the euro dollar over here, more likely there could be a chance of a potential bounce going forward, given that this market already starts to actually anticipate this ongoing deeper and quicker cuts from ECB at this point in time till April to June. All right, so this I want to stress over because markets are always forward looking. So later I'll cover the short-term technical outlook chart on the euro dollar. And next over here is we do have very strong US GDP data that was actually out yesterday as well. So this data is actually the advanced Q4 GDP for US. So what you could see over here is that let me share my screen. Yeah, this one. GDP growth rate Q4. So actually, they actually came in at 3.3% year on year for Q4 last year in the US economy, which actually surpassed very significantly on the upside from a 2% expectation. So what we could see over here is that number one, despite the fact that the the increase in interest rate, which lead to an increase in longer term of cost of funding in US, hasn't derailed economic growth as being portrayed by the GDP data. So what it means in terms from a stock market perspective is that we are now still in a Goldilocks scenario where if the US Federal Reserve starts to kickstart a interest rate cut cycle coming forward into either in May or in June or July. But given the fact that now US Federal Reserve official has toned down the expectation of the first rate cut to come in March, given the last 1 or 2 weeks of public speeches from these US Federal Reserve officials. So now market now are looking at potentially the first cut to come in somewhere around in May or June, very similar to what is showing on what in Eurozone as well, based on ECB President Lagarde press conference yesterday. So net, right, all this will actually starts to support further risk, we call it on behavior in the US market from a medium term to a longer term perspective. Okay, so with that, right, the US market actually continued to rally yesterday. All the major benchmark US stock indices, that means the four of them, the Nasdaq, the Dow Jones, the S&P, and the Russell all rallied. Then the Nasdaq and S&P going to inch new fresh all-time high. But what's interesting over here is that yesterday the Dow Jones and the Russell starts to outperform against the Nasdaq S&P, which is a good sign because now it's a bit of rotation back to that traditional industrial, we call it light industrial related stocks, which is heavily, and financial stocks, which is heavily weighted in Dow Jones, and also the Russell 2000 is pretty much driven by, we call it a small cap company that require much more leverage to actually keep their business operations sustainable. So all in all, right, if you look at the situation over here right now, is that the Nasdaq actually underperformed with a 0.10% gain. S&P 0.53%. The outperformer was Dow Jones 0.6%, then followed by Russell 0.7%. So one of the reasons why the Nasdaq and S&P actually underperform, because there's this one big cap stock inside S&P and Nasdaq, which is Apple. So Apple actually fell yesterday. Why? Because of this potential situation in Apple. Not situation, it's more or less it's been done in Eurozone. Saying that the company reduced App Store commission as low as 10% in Eurozone, and also the European courts actually right now wants Apple, or it's a must for Apple to support third-party app stores and gaming services. So that actually reduces the revenue stream from Apple App Store ecosystem. Okay, so if this situation starts to spread out globally, that means, i.e., not even pertain to Eurozone, in the near future, Apple potential services revenue may start to actually be less muted on the upside. So that actually explain the yesterday's underperformance of Nasdaq and S&P against the Dow Jones and the Russell 2000. All right, so that's pretty much sum up for the key highlights and the highlight to you all that drives the market situation. And what's interesting over here is that we do have very strong push up in the China and Hong Kong stock benchmark indices. And what's interesting over here is that the Hong Kong and benchmark stock index has a very close intermarket correlation with crude oil price. So that's why you see yesterday WTI crude continued to rally, but right now later I'll share in the short-term technical outlook over here is coming very close to our support level, where that could be not support, coming very close to a key short-term resistance level, where potentially there could be profit-taking activities coming into play in the coming into play soon. So later I'll touch on the WTI crude technical outlook. So now let us straight away jump to the short-term technical outlook right now, which I want to share with you all. So let us start with the major indices first. All right. So major indices over here. Okay, so now let me expand my screen. Okay, so let us start with the US Wall Street 30. Okay, so for the US Wall Street 30, we could see on my short-term technical chart over here. This is the 1 hour chart. So what's interesting over here that it continued to hold above this very strong significant short-term pivotal support that we have since the start of this week, 37,800. Why is it important? Because it's the former range top that consists of its former all-time high area, now turns into a pullback support at 37,800. Tested one time, two time, three time, and it rebound. And what's interesting over here is that yesterday test, it formed a higher low. All right, so indicating to us that the momentum now is getting stronger potentially in the short term on the Dow Jones Industrial Average, US Wall Street 30. So no change given this slew of ongoing positive elements on the US Wall Street 30. We will still maintain that short-term bullish outlook at 37,800. For sure, the first resistance or near-term resistance will be at 38,100 level. Above it sees the next intermediate resistance coming in at 38,400. Only an hourly close below 37,800 will start to see a minor corrective decline within this short-term uptrend phase that's still intact, to test close to the 20-day moving average, acting as a support at also conversing with a graphical support at 37,550. Okay, now Nasdaq 100. So over here, the Nasdaq 100 yesterday, it shaped a pullback much deeper than the Dow Jones Industrial Average. But what's interesting, this pullback is now coming very close to our predefined short-term pivotal support that we have yesterday, which is at 17,290, which is important. Why? Because this is the median line of this minor ascending channel that is in place since the low of November last year. All right, so net over here, right? And also, if you will do the Fibo retracement, taking into account of this minor this prior minor impulsive up move all the way up to the current all-time high at this level here, it also confluence with the 38.2% Fibo retracement. So net all in all, as long as this potential pullback managed to hold at 17,290, we will still maintain that short-term bullish outlook on the Nasdaq 100 for today, with the first resistance to watch will be at 17,750. Only an hourly close below 17,290 will negate this bullish tone to kickstart a minor corrective decline within a short-term uptrend phase that is still intact to expose the next support level at 16,910. We also confluence with this upward sloping 20-day moving average as well. Okay, now German. So over here, the German 30 continues to be remains very resilient, and yesterday is attempt to actually retest the 16,970 level. So this 16,970 level is actually confluence with the current minor complex range stop that is in place since the all-time high area of 14th of December last year. So all in all, what you could see over here is that it started to shape another higher low. So what I could do over here, I will tidy up the short-term pivotal support level, taking into account of this area over here, also confluencing quite closely to the minor ascending channel support that I drew from the low of 17th of January. So now this level here will be 16,000 pardon me, 16,750. Okay, so I will tidy up or tighten today's short-term pivotal support level to 16,750 on the German 30 index over here. So still maintain that short-term bullish outlook as long as 16,750 holds. A breakout above 16,970 will start to see the next impulsive up move for the next resistance to come in at 17,130. We saw confluence with the upper limit of this minor ascending channel. All right, but however, if you start to see an hourly close below 16,750, then it will negate this bullish tone to see a slight down for a minor corrective decline within a medium term uptrend towards the next support at 16,640 and slash 16,515, which actually confluence with the upward sloping 50-day moving average. Now, Asia stock indices. Let us start with the Hong Kong 33. So on the Hong Kong 33 or the Hang Seng Index now is actually trying to break above the 16,100, 16,220 level, which is playing around also at the 20-day moving average. So with that situation over here, there could be a chance of a pullback to take shape for today. So as long as the pullback didn't surpass again this short-term pivotal support zone that we highlighted yesterday, 15,660, 15,530, potentially there could be another round of bullish tone taking shape on the Hong Kong 33, with the next resistance level to watch will be at 16,525. All right, so what 16,525 is actually confluencing with the downward sloping 50-day moving average, and as well as this minor congestion area here, graphical congestion area, 3rd of Jan to 5th of Jan this year, also confluencing at the similar level at 16,525. So the next key thing we'll ask ourselves is that this current push up on the Hong Kong 33, is it the start of a major bottom? Unfortunately, there is still not enough clear technical elements to justify that. But what we could see over here is as long as 15,530 holds, potentially we could start to see another leg of minor corrective rebound to take shape within its medium term and major term downtrend phases on the Hong Kong 33. Only an hourly close below 15,530 invalidates this extension of the minor corrective rebound to start to see another round of choppy decline to retest 15,000 level, the next support level for the Hong Kong 33. Now, Japan 225 lastly. So Japan 225, yesterday we flipped to a bearish bias because of a weak technical element has started to emerge. Why? Because it broke down below this minor ascending channel support from the low of 4th Jan and start to trace a series of lower high. All right, and right now for sure it already broken below the 16,150 level. Previously was a key support to maintain our bullish bias. So with that, no change. Right now it's in the midst of doing a minor corrective decline. Like I stress again, minor corrective decline. No signs of a start of a major bearish reversal on the Nikkei 225 or the Japan 225. Why? Because price action is still trading above the 20 and the 50-day moving average, which indicate to us that whatever down weakness that we're seeing right now is more likely a minor corrective decline within its short and medium term uptrend phase that's still intact. Support level to watch for this minor corrective decline will be at 35,350. No change. Congestion area graphically from 11 of Jan to 18 of Jan, and also confluence with a key Fibo retracement level taking from this last push up, which is 38.2% Fibo retracement. So as long as 36,530 short-term pivotal resistance holds still maintain this potential ongoing minor corrective decline phase for Japan 225 with the support level to watch at 35,350. So for sure, if you see an hourly close above 36,530, then this minor corrective decline scenario will be invalidated to potentially kickstart another round of impulsive up move towards 37,000, followed by 37,480. We saw confluence with this major ascending channel upper boundary, this light green, greenish blue line, which is in place since March 2022 low. All right, so that's pretty much sum up for the major stock indices. So all in all the major stock indices are still in bullish dynamic. Only the Japan 225, we still maintain our bearish bias, but this bearish bias for Japan 225 is only, I want to stress, is a minor corrective decline within its short-term and medium-term uptrend phase that is still intact at this juncture. All right. Now flipping to the major FX pairs. So let us start with the sterling dollar. Sterling dollar continue to actually evolve within this short-term ascending short-term triangle-like configuration since the high of 20th of December. So since the start of this week, given that it's still trading sideways over here, there's no clear signs of any breakout on the upside yet. So we will still continue to maintain our neutrality stance for the sterling dollar for today between the range of 27,060, 12760 and 12640 level. Euro dollar. So what's in trade of the euro dollar? Like I stressed over at the start of my daily dose, it managed to help at this 10840 / 10820, also the 2200-day moving average, shape a retest of this low and now attempt to shape a bounce out of it. And what's interesting over here is that after the test of this low, you look at the RSI, it hit the oversold level, but after hitting this oversold, it formed a higher low from the previous oversold that was seen in the oversold region. So indicating to us, right, there's some sign that yesterday's downside momentum has started to ease off, which potentially, as long as this 1.0820 short-term pivotal support holds, it could still see a bit of potential push up within a minor range configuration, with the minor range stop now at 1.0906 level. Okay, we also confluence with the 50 and the 220-day moving average. So net, we will still maintain this potential short-term bullish bias within a range configuration as long as 1.0820 short-term pivotal support holds. First resistance to watch will be at 1.0906, then thereafter followed by 1.0965. All right, this two zone business zone. Only an hourly close below 1.0820 will see a extension of this minor corrective decline towards 1.080, followed by 1.075 support level. Aussie dollar. So on the Aussie dollar over here is that what we could see is that the Aussie dollar continue to actually trade sideways, holding above the pivotal support at 65.70, 65.50. So also trading around the 200-day moving average, but still can't break above the first resistance, which is we highlighted since on Wednesday this week at 66.14, 66.14. Okay, 66.14. So 66.14 also very important. Given this is a minor range resistance that is in place since 22nd of January, it also confluence with this minor descending trend line that is in place in 28th of December. So it requires to have a very clear bullish breakout above this level over here at 66.14 to at least potentially unleash a more substantial a minor recovery towards the next resistance at 66.50. So no change for today, still using 65.50 as my short-term pivotal support, still maintain this short-term bullish bias within a range configuration. First resistance to watch 66.14, only above it exposes the next resistance at 66.50, which confluence with the 20-day moving average as well. However, hourly close below 65.50 will actually start to see a further potential choppy move to retest the medium-term support level at 65.20. And also one thing positive to highlight over here is the RSI continue to shape a higher high, holding a higher low, pardon me, continue to shape a higher low, holding above this parallel ascending trendline support that I drew from the previous bullish previous we call it a swing low over here on 23rd of Jan. All right, higher low. Okay, so indicating to us that a bit of we call it positive momentum has also starts to be prevalent in the Aussie dollar pair, at least in the short term on the hourly basis. Dollar yen lastly, so for dollar yen, right, it continued to actually be much weaker within our expectation. Over here, it didn't break above the pullback resistance of the minor pullback resistance of 148 figure level, which is corresponding over here with the former minor ascending channel from the low of 20th of December now turns into pullback resistance. So I don't want to put 148 figure as a short-term pivotal resistance, so I'll be still using 149.80 as my short-term pivotal resistance level. So as long as this 149.80 didn't surpass, potentially the dollar yen could see a bit of what I call churning towards the downside to expose the next near-term support level at 146.25. Graphically, this minor swing high over here of 11th of Jan, former minor swing high, turns to pullback support and also confluence with the 50-day and the 20-day moving average, making this as a critical support level in the short term on the dollar yen. So net still maintain that short-term bearish bias on the dollar yen as long as 149.80 short-term pivotal resistance holds. Only an hourly close above 149.80 will invalidate this short-term bearish bias on the dollar yen to see another round of impulsive short-term move towards the next resistance at 1520. 150.20/150.70. So net overall in the FX space over here, we still do expect dollar strength to be kept for now in the short term. Okay, now going on will be spot gold. So spot gold XAU/USD, what's cooking on spot gold? No change, going to be sideways, holding above 2015. So still maintain that short-term bullish bias as long as 2015 holds on spot gold, with the first resistance to watch will be at 2040/2045. This zone over here, you can see my screen. Okay, which is so confluence with the 20-day moving average. So net overall, still maintain that short-term bullish bias on spot gold within a range configuration as long as 2015 holds. Only an hourly close below 2015 will negate this we call it bullish bias to see a continuation of this minor corrective decline towards 2000. Then thereafter potentially with the risk of testing 1990 next if 2000 doesn't hold. Now, like I shared earlier on WTI crude oil. So crude oil now is approaching a key resistance level, which is 70.80/40. Still recall in WTI crude since late last week, we will have that bullish bias. So bullish bias now almost come close to the resistance level. Why this resistance level is crucial in short term is the 200-day moving average 78.40, and also the one close to the one-time Fibo extension of this ongoing up move over here. We could see, and as well as graphically this congestion zone over here as well. So right now, right, what I'm going to do over here is that potentially, right, given this strong up move in crude oil or West Texas oil, pardon me, I will use this okay. 1 second now, let me put this. Okay, so I will use this 78.40 level, 78.40 level as my short-term pivotal resistance, not support, pivotal resistance for a potential mean reversion decline. That means you know that prices don't go in one vertical line, they oscillate within a trend. So this right now, what we could see over here is given the strong push up in WTI, West Texas oil, in fact, right now there's high odds that it started to involve in a short-term uptrend phase. But you know that prices don't go vertical up, there will be oscillation within a trending phase. So now potentially is given the fact that it's coming close to the 200-day moving average and 78.40 inflection level. So there could be a chance of a pullback taking shape. That means a minor mean reversion corrective decline, with the first support level to watch will be at 75, then followed by for sure the 74.80, which also correspond with the congestion zone from 23rd of Jan to yesterday's area, and also as this pullback support level of the former descending trend line that I draw all the way from the high of 28th of September last year. So net, right, we will be flipping to a short-term bearish bias, but this short-term bearish bias is only looking out for a minor corrective decline within a short-term uptrend phase that is potentially evolving right now, with the support level at 75 followed by 74.80 before turning back into a bullish bias again. However, an hourly close above 78.40 will start to see an extension of this steep impulsive up move to test the next resistance at 79.75. Okay, so with that, that pretty much sum up for the short-term technical outlook on the various cross asset classes. So before we go, let's take a look at the calendar. What are the key events or data to look out next for today, Friday? So during the European session will be pretty much let me see. During the European session today will be pretty much quiet. Not much key data, except for we have one minor one, which is the German consumer confidence data out at 3 p.m. Singapore time. Then most important over here will be the US core PCE inflation data that is out later at 9:30 p.m. Singapore time. Why is it important? Because core PCE is the inflation metrics that the Fed observe rather than the CPI. So market participants right now are expecting a continued deceleration of the year-on-year core PCE price index to decelerate to 3% year-on-year in December from 3.2% year-on-year in November. So any number that is for sure below 3% over here will start to see a further dollar strength that's being kept. That means dollar weakness coming back into play, and also potentially could be beneficial to the major US stock indices as well. But on the flip side, if we start to see this number getting very hot, that means surpass 3.2% at 3.3 or 3.4, then for sure the odds of that first interest rate cut will be greatly reduced in March, and perhaps it will push down further down the calendar this year. So that could be a bit of detrimental to the major stock index, and we may start to see a bit of dollar strength coming back into the picture. All right, so with that, have a great day ahead, and I wish you a good weekend, and we shall speak again on next Monday. Thank you.